Okay. Good evening, everyone. The purpose of this discussion would be to serve as a pointers or a guide for you in preparing for your pre-final examination. I will try to guide you to the topics or to the kind of questions that may be asked during the examination. Starting with the essay, uh, I'll try to give you possible questions on the essay part of the exam. So for our subject, there will be one case wherein four questions will be given. Two of the four questions will be computational, and two will be more on uh, application, either application of the concepts or objective type of question, wherein you'll be asked to enumerate, define, and uh, compare and contrast certain topics. Okay, so beginning with the budgeting process, the one that is being displayed in the screen right now. For budgeting process, possible essay question here would be you'll be asked to describe the traditional budgeting cycle. Okay, so it will start with the formation of the budgeting committee, then the establishment of the budgeting guidelines. So basically, if you'll be able to describe the steps illustrated in this part of the handout, then that would be a satisfactory answer already for the essay question in case you'll be asked to demonstrate or to describe the steps in a traditional budgeting cycle. Okay. If the topic, if the essay question would be on uh, the sales and production budgets, possible essay question here would be um, the topics here are more suited for your MCQ questions, which I will point out later also. If the essay question will be from your capital expenditures and cash budgets, it would be focusing on so the objective questions will not be coming from this topic, guys, but I want you to go over the problems here because the case that might come out might just be a practice problem based on these handouts. Okay, so um, the other possible essay question would come here from the different kinds or types of budgets, wherein you will be asked to define the different kinds of budgets, the flexible budgets, the activity-based budgets, or the project-based budgets. Okay, and you will be asked to give one advantage or one disadvantage of using such budgets. For the other handouts for budgeting, just make sure to be familiar with the illustrative problems because the case might be taken from this illustrative problem. Now, there will also be uh, essay questions from the topics discussed during the midterms, during the pre-midterm and midterms. So if the essay question would be asking about leases, the possible question there would be the criteria on classifying a lease as a finance lease. If the essay question is on long-term assets, then you would be asked about uh, the different depreciation methods to explain how depreciation is computed under the various depreciation methods, or you'll be asked to explain the process of impairment testing. How are long-term assets tested for impairment? So you could be asked for the rules on impairment of long-term assets. If it would be on the financial statements, it could be on the statement of cash flows. You'll be asked to define your operating, investing, and financing cash flows. And you may be asked to give examples of those kind of cash flows. Okay. I cannot give you the exact questions that will come out, but definitely will be among those that I have just mentioned. You could also be asked to give two or three differences under the US GAAP and the International Financial Reporting Standards. Okay. So basically, those would be the possible essay questions. Again, for our subject, we will have only one case, and we'll have four questions, and two of those questions would be computational. So the questions I have just given would be the other two questions for our case. Okay, so make sure to be ready to answer those possible essay questions I have just mentioned. Now let's proceed to the practice questions for the pre-final topics. We'll quickly go over the questions. We'll just focus on questions that have a high chance of uh, coming out, or questions that would help you prepare for the questions that will come out in your multiple choice exam for your pre-finals. Okay. So of course, you're expected to be familiar with all the definitions class. A continuous budget is one that is available for a specified future period by adding a period to the period that just ended. So it's a rolling budget. You just add, you just continue on the budget for the previous period. Okay. Another possible question would be on uh, mostly on uh, budgeting concepts. Okay, a higher authority other than the team that develop a budget must review and approve the budget. How does this contribute to a successful budget? The answer here would be that higher authorities will be able to identify flaws and discrepancies in a budget. Okay, so mostly you would know that you are choosing the correct answer if the statements are mostly positive. Okay, uh, but here, if you look at choice letter B, higher authorities are able to enforce a budget more effectively. Effectively, this is a positive statement, but this is not accurate because higher authorities have little control on the actual implementation already. It would be those at the lower level of the lower level management that would be able to have a control in the enforcement or the implementation of the budget. Uh, Choices C and D are simply not correct because a budget authorized by higher authorities is considered more realistic by employees. Those that are considered to be more realistic are those that are developed with the inputs from your employees. But if it's just given, if it's just if the budget is just imposed by higher authorities, then it would not be considered realistic by employees. Budget authorized by higher authorities contains technically correct and reasonably accurate estimates. Again, those that are at the higher top level management have uh, lesser amount of specific knowledge on the estimates on costs and revenues, so they would not be able to provide better or more accurate estimates. If the estimates come from those that are actually involved in the incurrence of the cost or the realization of the revenues, they would be the ones that would be able to provide you with more correct and accurate estimates. So the best answer here is letter A. Next, a company that uses the top-down approach. Top-down meaning it comes from the top, then it goes down. Opposite here would be your bottom-up. You start from those at the implementation level, which would be approved by higher level management. Other term for top-down would be the authoritative, while your bottom-up would be your participative. Okay. A company that uses the top-down approach rather than a participative process will feel the impact of its budgeting process mostly in which form? The answer here is that receive the lack of commitment of operating managers to the final budget. Okay, if there will be very little participation from your operating manager, so they will not have ownership of the budget, so they will lack commitment over the budget. Okay, so letter C here is just the exact opposite of letter A. Uh, but one advantage, please always take note of the advantages and disadvantages of the different approaches or methods or the different types of budgets. One advantage of a top-down approach is that it would be developed a lot quicker because it will simply be decreed by the higher level management. Okay, so letter B is incorrect uh, because shorter time is required to prepare a budget using the top-down approach. And of course, since a top-down approach is the opposite of your participative process, there will be lesser flow of information from the bottom to the top. So that's why the only correct answer here is letter C. Next, which of the following statements concerning best practices in budgeting is correct? Answer here is uh, logically it would be a blend of the authoritative approach and the participative approach would be considered as best. While both top down, bottom up will have their advantages, class, but they also have their disadvantages. So, uh, of course, the practice that we consider that to be best would be a combination of both, which would eliminate the disadvantages of the two methods and which would be able to utilize the advantages of the top down and the bottom up approach. Number 10, which of the following is not a step in an ideal budget process? Of course, the answer is letter D. It is the budget is not approved by the line managers. Okay, uh, it will be approved by your top level executives. Okay, letter A, the budget draft is revised in an iterative process based on discussion between participants. Obviously, this is not yet the uh, this is part of the steps in the budget process. Budget participants outside of top management prepare initial budget draft. So ideally, the budget will start with those at the uh, those involved in the operations, those at the level of line managers. Then the initial budget will be submitted to the next level up for review until it reaches the top level management for approval already. Okay, so definitely it will not be approved by your line managers. Number 13, which of the following statements concerning budgeting timeframes is correct? Okay, a capital budget typically covers from 5 to 10 years of activity, and an operational budget typically covers 1 year or less of activity. So when we use the word capital, uh, it connotes long term, so that's why it's 5 to 10 years. Operational, it connotes short term, so one operating cycle, which would normally be 1 year or less. Okay, so this should not be the first time that you encounter the use of the word of capital. Okay, your capital expenditures or capital expenses, these are long term expenses, while your operating expenses are for The benefits derived there is for only for a specific or a particular reporting period. Next, which of the following statements concerning successful budgeting is not correct? Budgets created by top management are likely to be more successful than budgets created by line managers. Again, this is not accurate because if it is just made by top management, then those at the bottom will not feel any ownership over the budget. So they would not uh, have any form, they will not have commitment to achieve uh, the budget because they had very little participation in the preparation of the budget if it is created by top management. And if we go over the other choices, the other statements are simply correct. Top management needs to make sure all levels of an organization understand and support a finalized budget for it to be successful. Even though line managers typically have more input into budgets than top management is ultimately responsible for budgets. This is correct, as what we have mentioned earlier. Okay, ideally, you take input from your line managers, but once the initial draft is prepared, it will be submitted to the next higher level of management for ultimate approval until it reaches the top management. Okay, a budget endorsed by top management is more likely to be followed by line managers than a budget not endorsed by top management. Okay, this makes sense. Okay, you will be more likely to support something that is, of course, endorsed by the top management. Here would be more of an question involving application. For the past 3 years, Apex Industries has employed top-down budgeting. Throughout that entire period, the firm's budgeted costs and revenues have differed significantly from its actual numbers. Apex CEO believes the best way to remedy this issue is to switch to bottom-up budgeting, and he asks your opinion of his idea. What is your best response? The answer here would be the bottom-up budgeting will likely produce more accurate numbers, but only if you take care to ensure that the firm's lower level managers are not manipulating their forecasts to make uh, their performance look better than it really is. Also, it's important to remember that bottom-up budgeting is usually more time-consuming than top-down budgeting. Okay, let's try to determine what makes the other choices wrong. I'm not sure if that's a good idea. This statement alone is not a good way to start your answer. Bottom-up budgeting actually decreases the budget's likelihood of accuracy. So this statement is incorrect. Bottom up actually can increase a budget's likelihood of accuracy. Uh, Letter C, bottom up budgeting offers several benefits in that it takes less time. That's incorrect. Bottom up budgeting takes more time than top down budgeting. Next, that sounds like a great plan as compared to top down budgeting. Bottom up budgeting is more accurate, more likely to produce high levels of managerial commitment, and far less time consuming. Okay, so the first two parts of the that statement is correct, except for the last one, wherein it says that bottom up is far less time consuming. Again, uh, bottom up budgeting takes more time compared to your top down budgeting. Okay, so the only correct statement here is letter B. Which of the following is an example of a cost that is not controllable with respect to a production manager? The answer here is letter D. Maintenance workers hired by the head of facilities were assigned to different areas of the company by the head of facilities. This is not controllable by the production manager because uh, it is not the production manager who assigns them, and the production manager also is not the one who hires these maintenance workers. If you look at the other choices, all of them are subject to the control of the production manager. Letter A, maintenance workers hired by the production manager and who works exclusively at the manufacturing facility. The salary of supervisors hired by the production manager to oversee second and third shift operations. Then third is rent on the manufacturing facility that is negotiated by the production manager. So A, B, and C are controllable by the production manager except for letter D, which is controlled by the head of the facilities. Uh, Hopefully, before you watch this recording, you have already tried answering these practice questions on your own, and the purpose here would just be to simply guide you on specific points which could be asked during your upcoming examination. Which of the following is an example of a cost that is not controllable with respect to a product line manager? Uh, the answer here is letter C, advertising expenditure that are made at the organizational level. Okay, so all the other choices are controllable by the product line manager. Okay, so difference between A and C is that the advertising expenditure in letter C is made at the organizational level, and it is for all the products that are sold by the company. Which of the following statements is correct concerning performance evaluation? The answer here is letter A. Decision makers should not be evaluated based on costs outside of their control, since these costs do not reflect the decision maker's performance. Okay, let's try to check what makes letter B, C, and D incorrect. Decision makers should be evaluated based on costs outside of their control. That is very incorrect. You should be evaluated based on costs that are in your control, and you should not be evaluated over costs that are outside of your control. Okay, so basically, letter B is the exact opposite of the correct answer. Letter C should not be evaluated based on costs they control. Again, that is incorrect. Uh, the costs that you control will reflect your performance. Okay, so the only correct answer here is letter A. Next, which of the following is not an example of the budgeting process facilitating communication and coordination of organizational activities? The answer here is the director of a new letter D, the director of new car sales at a car dealership shares its plan to increase sales by 20% with the local chamber of commerce. Okay, the local chamber of commerce is not a part of the company anymore. It has nothing to do with it is unable to achieve this this plan to increase your sales. If you look at all the other three choices, they are all involved in the uh, operations of the entity, and they all have a participation. They are all parts of the company. Okay, here you are sharing it with the uh, director of customer financing. Next is the director of service departments. Next is the director of marketing. They all have something to do with the operations of the company. Next, which of the following is correct concerning authoritative standards? The answer here is letter B. Authoritative standards tend to be established more quickly than participative standards. I have mentioned this already. Let's try to go over the other choices. Employees tend to accept and adopt authoritative standards more than participative standards. That is incorrect. Employees tend to accept and adopt uh, participative standards more than authoritative standards. Okay, your more employees are more likely to accept standards in which they have a some degree of participation in the development. Letter C, authoritative standards tend to improve employee motivation more than participative standards. Again, that is incorrect. That statement is it is participative standards that tend to improve employee motivation more. Next, authoritative standards tend to be less closely matched to companies' goals than participative. Uh, that is incorrect. If a standard is set by top level management, then that is going to more closely match the company's goals, because after all, that will be the focus to your top level management. Next, which of the following managers is building budgetary slack? Budgetary slack is incorporating in the budget some sort of a leeway or a buffer so that you will not be considered as uh, failing to meet your targets. Okay. So the answer here is letter A. Sally C believes expenses will be 340,000 next year, and she budgets 350,000 because that's the amount that was budgeted for uh, this year. So uh, budgetary slack can be created by either decreasing your targeted revenues or increasing your budgeted expenses. Okay, even though you know that your expenses are likely going to be lower or your revenues are going to be likely higher. Let's go over the other choices. Kirk H believes next year revenues will be 560 and he budgets 570, hoping to encourage his sales staff to excel. Increasing your budgeted revenue is not a form of a slack because if you do not reach the 570 because you know that the realistic amount is only 560, that will have a negative impact on your performance. So that is not considered as a slack. Uh, Believes that next year expenses will be 125 and he budgets 123, anticipating some efficiencies. Okay, so if you're actually budgeting a lower amount than the amount that you expect, uh, if you set up a lower amount of expenses, then that is not that is the opposite of a slack. If you will go beyond the 123, then that will have a negative impact on the performance of the manager. Revenues will be 410 and she budgets 413 because she hopes to earn a bonus. Again, if uh, the amount you set up is higher than what you expect for revenues, that is not a slack. For expenses, if the amount you establish is lower than what is estimated, then that is also not a slack. Budgetary slack is again normally uh, created when you try to overstate your expenses and understate your revenues. Next, which of the following statements concerning establishing standards is true? The answer here is uh, historical data. Letter A, historical data analysis involves analyzing past performance data to determine the average time needed to perform the activity. So basically, letter A is the definition of historical data. The What is being described in letter B and letter C are not historical data analysis. Then for letter D, actually, letter D is incorrect because if you use historical data instead of analyzing the steps, historical data is actually a less time consuming technique because you will simply use existing data. You will simply be analyzing past performance data which are already available. Visual following statements concerning revising budgets in response to significant new information is true. The answer here is an organization should allow revisions to budgets. So the first issue here is, are you going to allow revisions to budgets? Should you allow revisions to the budget in response to significant new information? The answer is yes. And knowing that, your answer should only either be B or C, because A and D states that you should not allow revisions. The second issue here is uh, what then would be the purpose? Okay. Uh, uh, in letter B, it says you allow revisions because revisions will make it easier to achieve budgeted targets. That's incorrect because the revisions may cause a negative effect. Okay, uh, it might make it more difficult to achieve your budgeted targets. The revisions might result in targets that are a lot more difficult to achieve. Okay. So the correct answer here is an organization should allow revisions to budgets in response to significant new information as budgets built on invalid assumptions are not helpful or useful. All of the following statements concerning participative standards are correct, except letter A. Participative standards tend to improve motivation less than authoritative standards. Again, this is incorrect. Uh, we have explained this already earlier. Okay, make sure to be able to compare, okay, the benefits and the advantages and disadvantages of bottom up and top down budgeting. Which of the following statements concerning establishing standards is true? Using activity analysis to establish standards is typically more difficult than using historical data to establish them. So that's correct. Uh, and activity analysis is also more expensive. That's why letter B is incorrect. Using activity analysis to establish standards is typically less accurate than using historical data to establish them. That is also letter C is also incorrect. Letter D, using activity analysis to establish standards is typically less time consuming. Again, it is historical data analysis that is less time consuming. So the only correct answer here is letter A. Sales and production budgets. What is the company's budgeted sales revenue for April? When we talk about budgeted sales revenue, it is simply your budgeted unit sales times your budgeted selling price. In this case, your budgeted selling price is 40 per unit as provided in the first sentence. And then since you're asked for April, you have to determine your budgeted level of sales in terms of units for April. And for April, it is 257,000. So 257,000 times 40 will give you your 10,280,000. Okay, most of the problems that will come out in the multiple choice component of the exam are very simple problems. I think only one or two will require a long computation process. The question here is, what was the desired ending finished goods? Okay, so the company has 3,000 units at the beginning. The sales budget is expected to be 12,000 units. If the production budget shows that 14,000 units are required for production, okay, so what's happening here is we are asked how much then is our targeted ending finished goods inventory if we are producing 14,000 when we already have 3,000 at the start of the period and we will only be selling 12,000. So uh, you have beginning inventory of 3,000, and then uh, you will be producing 14,000 units, so total units available would be 17. And your expected sales is 12,000 units, so 17,000 minus 12,000, then you are uh, budgeting ending finished goods amounting to 5,000 units. Okay, you only need to sell 12, you already have 3, but you are producing 14. That means you are targeting your finished goods ending inventory to be at 5,000. Question here is, how many bikes should it manufacture for the month of June? So we are at June, and the problem tells us that the company plans to keep an inventory of 25% of July sales at the end of June. Okay. So how much then are you going to produce? Okay. So you will be selling for June 12,000. Okay, and then you want to be ready for 25% of your July sales, and your July sales is 14,000. So 14,000 times 25% will give you 3,500. Okay, and then you want to have 3,500 at the end of June, and you will be selling 12,000 for June. So that means you will be needing 15,500 all in all. But since you already have 3,000 at the start of June or at the end of May, so you will only be needing to manufacture an additional 12,500. Okay. So the good thing with the problems here is that uh, mostly logical. You just have to follow the situations or scenarios described in the problem. Okay, budgeted production for September would be how many units? Okay, and the company requires that 5% of the next month's sales should be on hand at the end of each month. Okay, so we are in September, and September our budgeted sales is 20,000, and we have to prepare 5% of the next month's sales. So that would be 5% of October's sales of 30,000. So 5% of 30,000 is 1,500. But the answer here is not 21,500. You simply do not add 20,000 September sales with 5% of the October sales of 1,500 because uh, at the start of September, that means the previous month had already prepared 5% of the September sales. So that means at the start of September, we already have existing inventory in the amount of 5% of 20,000, which would be 1,000. Okay. So we will be selling 20,000 in September. We want to be prepared for 5% of next month's sales, which is 1,500. So the total we need is 21,500. But since we already have 1,000 prepared last month, at the end of last month, so the additional units that will be produced for September will only be 20,500. Okay, so please do not forget to deduct the beginning, those that are already available at the start of the month, in case you are looking for the amount to be produced for the current month. Okay, so for the current month's production, do not forget to add the amount that is to be prepared for the succeeding month's sales, but do not forget also to deduct the inventories that are already prepared from the previous month to cover the current month's sales. What is the budgeted production for May? So what happens here? The company requires that 30% of next month's sales be on hand at the end of each month. So we are at May. So May is 44,000, but that is not the answer because we also have to prepare for 30% of June. Then June is at 60,000. 30% of 60,000 is 18,000. 44,000 plus 18,000 is 62,000, but that is also not the answer because we know we do not have to produce 62,000 units for May, even though we are preparing 30% for June because during April already prepared 30% of the May sales. And 30% of 44,000 would be 13,200. So 44,000 May sales plus 18,000 in preparation for the June sales minus the 13,200 prepared by April for the May sales. So the answer here would be 48,800. Next, why is a company sales budget developed before the production budget? Because the company only wants to produce as many units as it expects to sell. Okay. Which of the following budgets is regarded as the foundation of the master budget? The answer here is the sales budget. Everything springs from the sales budget. With the sales budget, you will know how many you will have to produce. Then you will know how much materials, labor, and you will have to you will have to spend on to achieve your based on your sales. You'll be able to establish your production budget, okay, which would tell you how many materials and labor you will need. And if you already have your production budget, then you'll be able to prepare your the amount of cash that you will be using to finance your production and operations. Which of the following correctly lists the components of a sales budget? Okay, sales budget, as we've computed before, is simply your expected unit sales and your expected selling price. The challenge for your sales budget would simply be on the estimation of your unit sales. Which of the following statements correctly describe the relationship between the sales budget and the production budget? Okay, the production budget is prepared after the sales budget because again we start with the sales budget. Which statement is most correct concerning the role of the sales budget in the development of an accurate annual profit plan? Without an accurate sales budget, a company is less likely to have an accurate annual profit plan because again everything springs from your sales budget. Okay, the question here is what is the company's budgeted sales revenue? So budgeted sales revenue simply budgeted sales times budgeted selling price. Budgeted selling price here is 65 as stated in the second sentence. Next, we're looking for the month of July, and then for July, the budgeted uh, sales in terms of unit here is 114,500. So 114,500 times 65, you would get 7,442,500. Okay. So again, these are the kinds of questions that will come out in your exam, and just imagine you would still get this wrong. Okay, it's very unforgivable. What is the company's budgeted production for May? What does the problem tell us? We are May will have sales of 47,600, but that is not the answer because we will have to prepare for the succeeding month's sales, which is for June. And for June, we are expecting 58,200. Okay, and 30% of 58,200 would be 17,460. But you simply do not add 17,460 and 47,600, which would give you 65,60, because you'll have to understand that in the month of April, we have already prepared also 30% for the May sales. Okay, so you deduct 30% of the May sales of 47,600, which is 14 to 80. Okay, and that will give you your 50,780. Alternative here would be to simply get 70% of your May sales, then you add the 30% of your June sales. You should still get 50,780. Uh, so in this question, you're asked the total of cash costs that will be reported. So you just have to determine those that will have to be paid in cash and those that are not to be paid in cash. Okay, but even those paid in cash, you will have to exclude. You will have to exclude those that are not related, those that are not under your, those that are not yet payable. Okay, so sales commission 4% of sales, and the sales in this problem would be 400,000. So 400,000 times 4%, that will give you 16,000, and that would be your sales commission for the month, and then your shipping expenses, of course, and then the 12,000 will not be included because it is still payable next month. Then we will include electric and water utilities of 750. The depreciation, of course, is not a cash expense, so that will not be included. Then the bad debt expense will also not be included. So we'll only have 16,000, the 4,500, and then the 750, and that will give us our total expense of 21,000, 250. What are the budgeted cash payments for March? Direct materials budget shows total cost of direct materials purchases for January 125. For 1,000 February. But the problem is we do not pay them all in the month in which they are purchased. The problem tells us that 60% is paid in the month of purchase and 40% in the following month. Okay, so since we are looking for March payments, this will include 60% of our March purchases, but it will also include 40% of the February purchases, because the February purchases will be paid in February and on March. 60% of your February purchase will be paid in February, but 40% of your February purchase will be paid on March. Okay. So, and our March purchase is payable also for in March and in April. So during March, the amount that will be paid from our March purchases will only be 60% of 175, which is 105,000 as they shown in the solution, and then you add 40% from the February purchases, which is 60,000. So you'll have a total of 165,000. Which of the following statements is correct concerning the cash budget? The answer here is increasing the percentage of inventory purchase on credit relative to inventory purchase for cash would decrease expected cash disbursements. If you have more purchases on account than cash purchases, then definitely it will decrease your expected cash disbursements. All the other choices are incorrect since they are stating the opposite. Which of the following statements correctly explains the relationship between the cash budget, the capital expenditure budget, and the pro forma statement of cash flows? Okay, all of the cash flows used to prepare the pro forma statement of cash flows are used to prepare the uh, cash budget. Okay, because the cash budget will show all kinds of cash flows. Let's try to go over the other choices. All the cash flows used to prepare the pro forma statement of cash flows are used to prepare the uh, capital expenditure budget. That is incorrect. Some of the cash flows used to prepare the pro forma statement of cash flows are used to prepare the capital expenditure budget, and some are used to prepare the uh, cash budget. Okay, again, if letter B is incorrect for being not consistent with letter C. The cash flows used to prepare the pro forma statement of cash flows are different from the cash flows used to prepare the. Okay, letter D is the exact opposite of letter C. Uh, Problem 100 is one of the examples I've told you that will require a longer solution. There will only be one or two that will come out. One or two of these that will come out in your exam. So please prepare for this kind of questions. Okay, so make sure to solve this problem, which we will skip as it will take a lot of time to go over. Okay. Um, the same for problem 102. Next, all of the following statements are correct concerning the use of cash budget, except the cash budget can be used to determine whether a company will have satisfactory profitability. That is incorrect. If you're looking for your profitability, you should be looking for something that will show your revenues and your expenses. Your cash will show only your collections and your disbursements. Okay. Remember that collections are not the same as revenues, and disbursements are not the same as expenses. And what are used in determining profitability would not be your collections and your disbursements. It will not be your cash inflows and your cash outflows. It will be your revenues and your expenses. 114. So you're asked for your capital expenditures. So you look for your long-term expenses. Administrative spending is an operating expense. Spending to acquire a business, that is a capital or a long-term expenditure. Manufacturing equipment, that is a long-term or a capital expenditure. Spending to expand into a new product line, that is also a long-term or a capital expenditure. Material spending and training spending are operating expenditures. So it's only the second, third, and fourth disbursements or expenditures. So you will have 1 million plus 900 plus 1,200,000. That will give you 3,100,000. Which of the following statements is correct concerning the cash budget? Uh, Increasing the letter D, increasing the time a company takes to pay for credit purchases from 30 days to 45 days would decrease expected cash disbursements in a cash budget. That is correct. If you will have a longer credit term, then your disbursements will decrease. Cash disbursements will decrease. Which of the following statements is correct concerning the cash budget? We've already discussed a similar question. Okay, so make sure to be prepared for this kind of questions. What are the total expected cash receipts during March? Okay, so basically this would be the opposite of the disbursements we computed earlier. This time, instead of purchases, we will have sales. Okay, um, but please take note of this problem. Okay, this is different from the problems we have discussed earlier, because this one, the amounts given here is already a total of your cash and your credit sales. Okay, so you will have to segregate your cash sales from your credit sales. And from your credit sales, there is uh, there is information given here as to how they are going to be collected. Okay, so 40% are sorry 50% are collected in the month of sale, 50% is collected the following month. Okay, but do not simply use the 50% in the entire 40,000, 60,000, 50,000, because those are your total sales already. The 50% collectability in the month of sale and the succeeding month applies only to the portion of your sales that are on credit. Okay, so the 50% should only apply to your credit sales. Okay, so make sure to practice on this problem. This is not a very straightforward problem, so please be careful. Which of the following statements correctly explains the relationship between the cash budget and capital expenditure budget? All of the cash outflows from the capital expenditure budget are included as outflows on the cash budget. That is correct. Next, the company that is most likely to use a budget committee when developing a company-wide budget is which of the following? So the answer here would be simply the company that is bigger. Okay, and all the other three choices here, other than letter C, are more or less uh, small businesses. Okay, so the answer here is Brunner Electronics, an international electronics manufacturer. You would expect this company to set up a budget committee. A regional company of a small bed and breakfast compared to letter C is not expected to be using budget committee. The same for a local lumber and hardware store, and the same for an online company that is run by one family. Uh, if Benny uses a project budgeting system, what will be the income included in that budget? A feature of the project budgeting system is that you will only be using uh, costs and revenues that are related, that are relevant to the project. Okay, so the figures here are revenues of 10 million, variable costs of 6 million, and direct fixed costs that are directly related to the project in the amount of 1,500,000. The corporate administrative cost will not be uh, included because it is not directly uh, related to the project. So you will have revenues of 10 million minus variable cost of 6 million minus fixed cost of 1,500,000. Your answer here will simply be 2,500,000. All of the following are factors to consider when determining the appropriate budgeting system to be used. The answer, except the extent that lower level employees will be a part of the budget development team. Okay. Uh, while you would expect the lower level employees to be involved, but they are not a consideration in determining the appropriate budget system. Which of the following statements correctly describes a disadvantage of using a flexible budgeting system? The answer here is a flexible budgeting system is only useful for control purposes and not planning purposes, because you make adjustments to the flexible budget in response to the actual levels of production or sales. Okay. So I hope you're able to notice a common trend. We are focusing on disadvantages and advantages of the different budgeting systems and uh, um, budgeting methodologies. Okay, so make sure to absorb this one, that the final result of the master budget is a pro forma financial information. Which of the following statements correctly describes the benefit of using a flexible budgeting system? A flexible budgeting system is used to facilitate variance analysis. Okay, because you are able to make adjustments based on actual level of production and sales, then you will be able to narrow down the source of the variance, whether it is simply due to the uh, difference in the level of production or activity, or is it simply, or is it because of inefficiencies in the cost and in the uh, operations. What is the expected cost of rent in September? The rent is a fixed cost, so regardless of the level of production, the rent should remain the same. And since the rent is 8,000, whether the production is at 4,000 or at 6,000, rent should still be at 8,000. Okay, this is not a foreign concept here. Which one of the following is not needed in preparing a production budget? uh, Budgeted raw materials. You will be able to determine your budgeted raw materials once you already have your production budget. What is expected labor cost in August? This problem will be different from 158 because labor is not a fixed cost, it is a variable cost. Okay, so if your level of production is at 8,600, your variable labor cost would be 21,500. But what if your production is at 8,000? How much then should be the expected labor cost? So to answer this one, you determine the labor cost per unit. So you divide 21,500 by 8,600, and that will tell you that your labor cost per unit is at 2.5. So if your production is at 8,000, you multiply that by 2.5, and that will give you your 20,000 expected labor cost. The major feature of zero-based budgeting is that it evaluates each activity and determines whether it should be maintained as it is, or reduced or eliminated. Which of the following statements correctly describes the benefit of using a master budgeting system? A master budgeting system is designed to develop a comprehensive budget that aligns an organization's operations with its strategy. So make sure to be able to define a flexible budget, a zero flexible budgeting system, zero-based budgeting, and master budgeting system. The starting point for preparing a master budget is the sales forecast. The starting point is the sales forecast. The final output is your pro forma financial statements. Please take note. Which of the following statements correctly describes the disadvantage of using an activity-based budgeting system? We've encountered this already. It is expensive to design, implement, and maintain. Okay, so please make sure to practice solving this problem. Um, this is just an application of your cost concepts. The same for this problem. Okay, so make sure also to know when is it best to use project budgeting, activity-based budgeting, flexible budgeting, or continuous budgeting. A company wishes to prepare a budget that will enable it to compare the amount actually spent to produce 10,000 units of output with the amount that should have been spent to produce 10,000 units. Which budgeting system would be the most appropriate system for this company to use? So it would be your flexible budgeting system. A company wants to develop a budget that includes plans for all aspects of the organization. Which budgeting system would be the most appropriate system to use for this purpose? A master budgeting system. Again, make sure to take note as to when these budgeting systems are most appropriate to use. Okay, make sure to solve problem 168, also 475, also 477. Which of the following statements correctly describes the benefit of using an activity-based budgeting system? An activity-based budgeting system uses non-volume cost drivers to more accurately estimate costs than other budgeting systems. Which of the following statements correctly describe a disadvantage of using a zero-based budgeting system? The annual review needed to implement a zero-based budgeting system can be very time-consuming and expensive. Okay, this is the primary disadvantage of your zero-based budgeting system because you will essentially be starting from scratch. Okay, this is just a, a different iteration of a problem I've told you to try practicing. Which of the following statements correctly defines a project budget system? A budgeting system used when a project is completely separate from other components of a company's operations or is the only component of the company. Okay, so that is why under the project budgeting system, you will not include those that are not uh, related to this specific project. A company wants to develop a budget that is suitable to use to plan activities in an industry where technology advances occur rapidly. Which budgeting system would be the most appropriate system to use for this purpose? The answer is a continuous or rolling budget system. Which of the following companies is likely to have the least formal budget process? Uh, the answer here would be a small town bakery that has been open only for 3 years. Which of the following statements correctly defines a zero-based budgeting? Zero-based budgeting is a budgeting system that focuses on constant cost justification of every budget item. Okay. So basically, that would be all. Hopefully, the pointers I have mentioned here would help you. I hope you find the time to go over this recording and to practice on the problems I have pointed out. Okay. So good luck on your upcoming exam.